Hi guys, welcome to Liberty Bunker. In the late 80s, early 90s, Fed Chairman Alan Greenspan lowered interest rates, increased liquidity. This led through the 90s into the early 2000s, built up into the dot-com bubble. Dot-com bubble burst in 2001. The Fed stepped in again as well, compounded with September the 11th. The US government didn't want to face a recession that would have followed after the dot-com bubble after September the 11th. So the Fed stepped in again, increased liquidity again, lowered interest rates again. This led to the housing bubble. The housing bubble popped in 07-08. Then the Fed stepped in another time, bringing interest rates even lower this time, basically zero. And not just the Federal Reserve, most central banks around the world, to stave off what would have been one of the biggest depressions the world had ever seen. Every central bank, pretty much, BOJ, Bank of England, ECB, they all dropped interest rates to zero. And this has now led to the bubble of everything. We have not just a housing bubble, everything is in a bubble. The only thing that is not in a bubble today in 2020 is common sense. That's the only thing that's not in a bubble. Let's take a look at some graphs and see how this bubble is flaring up. So this is from the Land Registry. This is UK government data. After the housing collapse, we hit a low for UK house prices in March 2009. The average UK house price dropped to £154,000. To where we sit today, this is the most recent data, December 2019. We're up to UK average house price of £234,000. So since the low, the average UK house price has increased £80,000. Don't forget, this was off the back of one of the biggest housing bubbles the world had ever seen. You just had to switch on any channel, in 2005, 2006, early 2007, and you would see a TV show where you would just go into a house, you would paint the walls, and then you'd flip the house for about £30,000 profit. It's one of the biggest housing bubbles the world had ever seen. It happened in America, happened in the UK, happened across Europe, happened in many, many countries. Now, this is data again, but just for London specifically, we hit a low of £245,000. We got to, after the bubble collapsed, it didn't really collapse. This is the thing, because the central bank stepped in and stopped the house prices collapsing as far as the market should have taken them down if the central bank didn't step in. But we hit this low of a London average house price of £245,000. Cut to the most recent data, which we have now. December 2019, we're up to £483,000. House prices have nearly doubled since their March 2009 low. London house prices have gone up £238,000 basically in just over 10 years, off the back of one of the biggest housing bubbles the world had ever seen. The bubble has not deflated since the housing bubble expanded. It deflated a little bit, and now we've, through just zero interest rate policy, through quantitative easing, through liquidity, through money printing, there's a bubble in everything, and it's not just houses. This is from The Economist, the global debt clock. This is the public debt of every country in the world, every government in the world that borrows, which 99% of them do. $58 trillion. $58 trillion. Where do you think that money is coming from? Where do you think the savings in the globe are for $58 trillion worth of bonds? It's liquidity, it's zero interest rates, it's money printing. This isn't real savings. There's not a $58 trillion glut of savings. It's liquidity, just like the housing bubble, just like the dot-com bubble. This money is fictitious. That's the way of fiat money. If you can print it, if you can expand, that's what governments will do. It's not just bonds, it's not just corporate bonds, it's not just, household debt. We're flaring up everywhere. So classic car market, you'll have to bear with me, the graph's a little bit small on this one. This graph shows return on investment. To the extreme right, we have collectible cars. This data is from 2006 to 2016, so over 1 decade, 10 years. Return on investment, if you were in this classic car, collectible car fund, 404% return over 10 years. The bubble's everywhere. The bubble is absolutely everywhere. It's in classic car markets, it's in the bond market, not just classic cars. Article here from This Is Money. Should you invest in liquid gold? Experts say rare whiskey is a good long-term bet as prices are up 582% in the last decade. Classic cars booming, whiskey booming. Where else can we see just this madness? Where is the everything bubble? This is from the Times. The investment that outstrips gold. A Hermes Burkini handbag. I don't know if I'm saying that right because I'm not a handbag guy. It may seem like misguided decadence to splash cash on a designer handbag, but it could prove to be a better investment than the stock market or gold. While the FTSE 100 has gained 12% last year, Hermes Burkini handbags have increased in value by 13%. There's bubbles in everything. Art, wine, handbags, the bonds, corporate bonds, government bonds, doesn't matter where you go. The bonds are just... The everything bubble is everywhere. It's insane. This really is insano world at the moment. I don't know what to say. Like, we're living in times of such bubbles. When this bubble pops, I don't know. This could just bring everything down. It's so scary what happens after at this point. I mean, we need to return to governments that run surpluses, people spending within their means. But it's so dangerous. Anything could happen after this. We could just go fully communist because there's a strong argument from the left now that capitalism has failed. And it's the central banks and the governments that have done it. This wouldn't have happened without central banks. This wouldn't have happened with, excess liquidity starting in the late 80s and never being reeled in and just get nearer. And interest rates have got lower and lower and lower. We're at zero now, where just money means nothing. You can just buy a handbag and you can make more money than if you had invested it into a sound FTSE 100 company. It's a complete insane world. This is just a shorter video. This is going to be part of a longer video that I'm going to do just on the state of the UK and global economy, and more than that, how the current virus sweeping the globe pans into that and could trigger, the biggest depression, the ultimate depression, because I don't see many ways out of it. I certainly don't hear many central banks or indeed governments saying they want to turn off the liquidity taps and go back to sound money. Maybe decentralization will save us. Maybe if everybody swaps over to crypto or gold-backed digital money, or even just trading in sovereigns. I don't know. Maybe that's the only way out of it at this point, or just go fully communist and... I don't know. It's scary. It's scary times. Let me know your comments on this one. To say this will slot into a larger economics analysis video that I'm doing, but that's going to be quite a long watch. I'm expecting that video to be, half an hour long. Probably one of the longest videos I've done on this channel that isn't a live stream. So just let me know your thoughts and opinions on that one. I'd love to know where you stand. Is this the everything bubble, or am I wrong? Is this just going to correct itself in a mild way and everything will be okay? I'd love to know your thoughts and opinions on that one. Thanks for watching this video. Jason from Liberty Bunkers signing off. Be prepared for the popping of the everything bubble, and I'll see you in the next video.